Want to turn to the other big story we're following right now, and that is your market. Stocks are trading higher on the heels of a strong July jobs report. Job growth rising more than expected last month. The economy adding 209,000 non-farm jobs, and the unemployment rate slipping to 4.3% for the month. President Trump praising the results on Twitter, saying, quote, "Excellent jobs numbers just released, and I have only just begun." Many job-stifling regulations continue to fall. Movement back to the USA. Joining me now is NYU economics professor Lawrence J. White, along with our own Nicole Petallides and Oxbow Advisors managing partner Ted Oakley. Nicole, to you first. Another record for the Dow, and a lot of it has to do with the jobs report.
Right, bring it on. People love records. I mean, very few people get tired of hearing a record here in the stock market. Good for their investments, their 401ks, their IRAs. But big picture, there is a little bit of divergence here. It's not all rosy. It's not all up arrows. The jobs report was good. In the prior month, when you put the net gain together, it was actually a gain of 2,000 more jobs. So that was good. But big picture, you're not really seeing all the FANG stocks, some of those tech stocks participating today. You're not really seeing energy participating today, but we certainly have plenty of winners, and it's nice to clock in another record close. So, and the last thing I will note is that now the Dow is up for the 9th straight day, and that's the longest winning streak since February.
You know, Ted, obviously, as we're looking and getting through the report, one of the things that stood out to me was the manufacturing boost. Can you give a little bit of credit to President Trump for that?
Well, if you look at it over the averages for this year and last year, they're about the same month to month. I mean, you have some months you'll pick up in manufacturing, but also this month, we had a really big increase in restaurants and bars, which you would have in July anyway. So I'm not trying to take away or give anything to anybody. I'm just saying that it's about an average year so far, compared to last year.
Okay, well, Lawrence, I still think that if you look at the numbers and you look at kind of the market reaction, I think we're seeing a trend here. What we're seeing is over the last 6 months, in particular the last 3 months, we're around that 180,000 number for the job report. So when you get that consistency, I think that's when you kind of feel like you're getting that turnaround that we need. And that's, I think, what the market is seeing today and feeling.
Well, there's no question. The market was pleased. The predictions had been for the job growth to be a little smaller. So when the actual exceeds the predictions, the market is going to take that into account. And that's all to the good. In addition, we've now been below 5% unemployment for over a year. We're basically back to where we were in 2007. And people forget 2007 was a pretty good year. Now, that's gotten lost in the midst of the trauma of 2008, the financial sector problems, which we knew a little bit about back in 2007. But basically, 2007 was a good year. We're back to those levels. It's a good economy. There's no question about it.
And Nicole, that's the bigger picture, I think, that I really want to drive home to folks, is that, you've seen for the first 6 months of this year, now the 7th month, July, you've seen strong job growth. In particular, we had May and June. Those numbers revised higher when they released the report this morning. It was tough to find a negative.
Well, the net together was higher. That's right. But I will say the strong jobs number is great, and the trend is in the right direction. When you break it down, though, there are still so many people who hope for more, better wage growth. Instead of having a part-time job, they want a full-time job to be able to provide for their families. So there is still room to grow in the jobs group overall. So I will say that it's nice to see the wages on the rise and the numbers on the rise, but it can be even better, and hopefully that happens over the next several years as well.
Lawrence, what do you think the Fed takes and does with this information?
Well, what the Fed really cares about is price increases that might be following wage increases. And was just said, we haven't been seeing the wage increases. This is a big puzzle. It's a puzzle for economists generally. It's certainly a puzzle for the economists at the Fed. And until we see stronger wage growth and price growth following that, I think the Fed's going to be very cautious about increasing interest rates.
And Ted, I do want to give you the last word. Excuse me, Lawrence, I want to give you the last word. Excuse me, Ted, I'm sorry. Ted, I want to give the last word on the issue of the closing, because we're looking at the 51st record close since the election. And I think that that really speaks volumes about the positive vibe out there that we're going to get less regulation, we're going to get growth. And I think that manufacturing job number we saw today kind of does reinforce that.
Well, you sure hope it does. You know, I would hope that that would factor itself in. I think they've got a lot more to do, and if they can do it over the next 24 months, it'll have a very positive impact. I mean, that's one of the biggest problems we have in the country right now.
All right. Well, Ted and Lawrence and Nicole, thanks to all of you. Appreciate the perspective today.